Can we go over just like all the different financial statements? What goes into them real quick?
Yeah.
Just as a refresher.
Okay, do you remember the order that we create them in?
Your income statement.
Yeah, so the income statement's always first.
And your income statement flows into the retained earnings statement.
We make retained earnings.
Retained earnings flows into the balance sheet.
Balance sheet, okay.
And then after the balance sheet, how many is there? 4 or 5?
There's 4.
Oh, okay, and then it's statement of cash flows.
And we have our cash flows. And then actually make this one a little lower there. Okay. So what goes on your income statement?
Your revenues minus your expenses.
So revenues minus expenses give us net income,
Yep.
or we could have a loss, right?
Yep.
Okay. And then what is the formula for retained earnings?
Beginning the retained earnings plus your net income minus your dividends.
Minus dividends gives us retained earnings. I'm just gonna draw an arrow so you can make sure we see where it goes. And then what's on your balance sheet? Right
We
here.
have the accounting equation, so assets equals liabilities plus stockholders' equity.
Yeah, let's break it up so you remember all the different parts.
Assets equals liabilities plus
I'm just saying what's in the asset section?
cash. Okay, so short-term investments,
So under the assets, we have
cash,
current,
current assets.
yeah, which includes cash,
Yeah.
accounts receivable, all those things. Okay, and then what comes next?
Long-term assets.
Long-term. Yeah, long-term assets or investments, same
Long-term
thing.
investments, okay.
Okay,
And then PP&E, property, plant, and equipment.
property, plant, and equipment, and then
Intangible.
intangibles, okay. Did you got us down?
And under intangible, is there, is that where goodwill goes?
Yeah, goodwill, patents, and other things.
Okay.
And then just remember with property, plant, and equipment, we're gonna subtract off the accumulated depreciation in there. It's not an asset to us, but we're gonna get
It's
rid of
a
it.
contra asset.
Contra asset, right, okay. What goes in our liabilities section?
Current liabilities, long-term liabilities. I'm a little confused about where bonds payable would go. Would that go under long-term? Or does it depend on the life of the bond?
Yeah, so it would depend, just based on, if we don't have to pay the bond back for 5 years, it's long-term, but if we have to pay it back within the next year, it's
Yeah.
current.
Okay, so unless it stipulates that it's gonna be within like the year, like how would you usually, what would you assume?
Unless they tell me bonds payable on, June 30th of 2014, then I'm gonna put it in long-term.
Okay,
Okay,
so there's long-term liabilities and then I think that's it.
that's it, yeah. Okay, and then stockholders' equity.
So there's common stock.
We're just gonna add these together, right? Okay.
Would preferred dividends be there, or would it just be retained earnings?
It's just retained earnings.
So where does preferred stock go?
It'll be, right now, you've only ever heard of common stock, but we'd also put preferred stock in there as well.
Okay.
Any stock. preferred or common, we'll go there,
Okay.
okay? So
Then
let's,
retained earnings is, yeah, from the retained earnings statement.
okay, and then cash flows statement, what's in that?
Cash from operations,
So operations,
so property, plant and equipment, right? Like, or no, sorry, that would just be like, the, like, the amount of expenses that you have to, or the revenue that you create and the expenses that you make just in the normal, like, everyday life of the business, right?
yeah, so the operations, the cash from the operations is basically the cash for what you're in business to do.
Okay, so it'd be revenues and expenses.
Yeah, most like revenues, expenses, and only cash ones, right?
Yeah.
Because this is the statement of cash flows, we wanna know how much cash we get just from operating our business.
So you're saying that, like, accounts receivables wouldn't go there?
Well, if we collected accounts receivables, when do we get an account receivable?
When we receive it?
Right, so like if we sell a shirt and we create a revenue from it,
Oh,
then
okay,
the cash we
understand.
get from the receivable would go in here.
Oh, okay,
Because it's
yeah.
cash for operations, but the account receivable itself, that's not cash yet.
Yeah.
Because we still have to get the cash from them.
Yeah, that makes sense.
But once they pay it to us, then it ends up right there.
Alright, so there's operations and then the expenses that occur. So like, if I was in business selling chocolate milk, the cost would be like the milk and like the gas to deliver it, and employees' salaries.
Yeah, so it's like the cash income statement, kind of. And then anything in cash from like our current assets and liabilities.
Yeah.
So like if we collect money from someone and an account receivable, then we would include that cash there. But if we had to like pay a current liability, we had, we bought inventory from someone and then we paid in their cash, like we bought our ice cream from them or whatever. What did you say we're doing? Or milk?
Yeah.
So we buy the milk from the dairy farmer on account and then we pay it to him. That's part of our operations, right? So most of the things in the operating section are gonna be income statement things. They're only cash, right? That's the important thing to remember.
Yeah.
So then it's like those current assets and liabilities. A lot of those things in those sections will end up there.
Okay.
So, all right, what else goes in there? What is the other next section?
Investing.
Investing. Can you give us an example of investing?
I bought a milk truck, or refrigerated truck to haul milk around.
Yeah. Are you in business to buy trucks?
No.
No. But you need that to be able to do it, to do your business. So you invest in a truck to be able to make it so you can earn the money that you need. So
What else would go in there?
you invest in just another company.
Oh, okay.
You give someone a loan.
Oh, okay.
Things like that. So a lot of these things are going to be in the long-term assets. But just the cash things, right?
Yeah.
So we buy a truck, so this would be like long-term investments, property, plant, equipment, intangibles.
Mm-hmm.
We pay $3,000 for a patent.
Yeah.
Or we sell a patent for $3,000 or something.
Or if we're like trying to get trying to get stockholders to invest, or.
That's not in investing.
Oh, sorry, yeah, sorry, I thought we were.
That's if our company is investing in someone else's
Yeah.
company.
Oh, okay.
Okay, so let's talk about the last section then.
Financing.
So financing, what goes in financing?
That would be like trying to get people to buy stock in their company.
Yeah.
Or taking a bank loan. Or, yeah.
So it's a lot of the cash long-term liabilities things and the cash stockholders' equity items. So we get a bond, we issue a bond, we get $5,000 cash from that bond.
Mhm.
So we have a bond payable, but we got the cash, so it increases our financing right now, our financing section, until we pay it back, right?
Yeah. That makes, yeah.
Does anything flow from these statements up above into cash flows?
long-term investments?
Yeah, so
From
let's
the
look,
balance
if we
sheet.
looked at the very bottom, we're gonna see what our cash is, right?
Yeah.
So within our current assets, there's cash. It's kind of our check number to make sure we've got all of our cash included.
Yeah.
And then we'll use some of the other things within here, but it doesn't, you don't take numbers directly from anything else other than that one.
Okay. So, income statement goes into retained earnings, retained earnings goes to the balance sheet, and the current assets from the balance sheet goes in the statement of cash
Well,
flow.
just the cash from the current assets.
Okay. So, do they always prepare the statement of cash flows last?
This is the order that they do it,
Okay. That makes sense.
because you need all of this information.
Is it possible to calculate the statement of cash flows first, if you wanted to?
You're gonna talk a lot about the statement of cash flows later and how they calculate like the cash flow from operations, because it sounds like it's easy, just keep track of your cash, right? But you're gonna see that there's a couple of rules and things that instead of having to keep track of it all year, we can just look at the end and the beginning of the year and see what's changed.
Yeah.
And so they do this last because they'll need a lot of the information from the balance sheet and the income statement to be able to do this
Alright.
at the end. Otherwise, the expense to keep track of it all year round
Enormous.
would probably be a little too much because of the time it would take.
Okay.
Sweet.